you're going to retire early, one of the things you'll have to figure out is how you're going to pay for health insurance coverage. If you're retiring before age 65, that means you're not going to be eligible for Medicare. So, if you retire before age 65, you've got a couple of options. You could purchase a plan through healthcare.gov or through your state health insurance exchange, or you might be eligible for a plan through your employer. Now, it's not just you, but if you're married, you may have some options for health, some other options for healthcare if your spouse is working or if they are eligible for health insurance benefits, retirement health insurance benefits through their employer. So in today's video, I'm going to walk through a case study using some example clients to see what their options are for healthcare. So let's take a look at Jerry and Elaine. They're 60 years old. They're both working professionals and retiring at age 60. Now the question is, what are their health care options? So let's go over to the flow chart and answer the first big question when it comes to health care and retirement, which is whether they are eligible for Medicare. Well, in their case, the answer is no, not because they don't qualify for some, whatever reason, but it's just an age thing. They're not 65 yet. Okay. Second question, are you eligible for health insurance through an employer after you retire? And for both of them, the answer is no. So this is something that is not very typical, but it can apply, so it's worth looking into. Some employers, especially if you've worked for a company for a very, very long time, it's possible that you are entitled to a retirement health care benefit. I've even seen with some people where they're not entitled, they don't get like a retirement healthcare benefit, but there's like a slush fund. So when they're retired, there's like a pool of money set aside for them that they can access to pay for healthcare costs, health insurance premiums, and that sort of thing. So not very common, but if it is, it's worth obviously looking into to take advantage of. In their case, no, their employers do not have a retirement health insurance option. Now, are you married and eligible for health care through your spouse's health insurance plan? Well, for this couple, for Jerry and Elaine, the answer is no, because they're both going to stop working. So it's not like they could hop onto the other spouse's plan. However, if that is the case with you, where you're going to have kind of a staggered retirement where you retire and then your spouse continues to work for a time, or vice versa, that is a very common strategy to just simply kind of piggyback onto your spouse's health insurance plan. Okay, now, do any of their former employers have 20 or more employees and offer COBRA? So in this example, we're going to say that Jerry, no, but Elaine, yes. So she is eligible to purchase COBRA. Now, COBRA is, you've probably heard this before, but essentially what it is it is the ability to stay on your employer's health insurance plan, but the cost structure is totally going to change once you're retired. And the maximum time you can stay on that plan is going to be 18 months. So we'll say that, yes, it is eligible for Elaine through her employer, but not for Jerry. So now I would say the main reason why you would choose a COBRA plan over purchasing a plan through healthcare.gov would be, I would say, first factor would be convenience. You don't really care about the cost. You're just totally indifferent to it. And so you just want to keep the same plan, not have to look at, changing doctors or anything, just keep everything the same, then COBRA might be the right option for you. Especially in a situation where maybe you're retiring at, 64 and a half, and you're only going to be, needing health care for a few months until you get onto Medicare. Well, in that situation, it might be worth just using COBRA coverage so that you don't have to switch from your employer to a plan through healthcare.gov and then switch over to Medicare at 65. You can just stay with your employer plan through COBRA until you apply for Medicare. So for Jerry and Elaine, price is important to them. They're not worried about finding new doctors and that sort of thing. So that leads us to the health insurance marketplace and looking at what are their options there. Now, when it comes to getting a health insurance coverage through healthcare.gov, I've got some other videos to talk about this, but there are subsidies that are available, which basically means that based on your income level, the government will pay for a portion of your health insurance. And there's a lot of strategies that you can use to be able to maximize those subsidies. To boil it down in simple terms, it's about looking poor on paper so that you qualify for these subsidies. I actually got that from on the channel. Somebody left a comment. I was like, oh, that is the perfect way to explain it. It's about looking poor on paper so you can qualify for discounts on your health insurance. So for Jerry and Elaine, for both of them, the answer is yes, they're going to buy a plan through healthcare.gov. And the next step for them will be to look at their income, where they're going to pull cash flow for retirement, to see if there's any strategies to qualify for some discounts on their health insurance. So hopefully this is helpful. I'll catch you next time.